Newsmax had one of the craziest IPOs that I've ever seen, went public at $10 per share. That was what public investors or people who are connected to the IPO could buy their stock for. But then the stock went up 2,200% in the day or so after trading began. Some of that gain has stuck. The stock is still at $26.82 as I'm recording. But I think it's now time to look past just the IPO and the pop and look at, is this a stock that we want to be investing in? The media business has had a ton of challenges really over the past decade or more. And the Newsmax IPO comes at a time when there's a lot of involvement with meme stocks and meme coins. So is this just a meme stock bounce, or is there really something there that we want to be paying attention to with Newsmax? Is this sort of a new media company? Let's dig into that today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Now, whether you like Newsmax's content or not, I do think it's worth looking at the company with sort of fresh eyes because the media business is going through a lot of disruption. So if this is a disruptive company, then it's worth analyzing what's working or what isn't for Newsmax. But let's look at some of the valuation numbers first, because that at least puts it. But this is also a company that IPO'd. They went public. They did not stay private. And so it's always worth wondering why they did that. Was this an opportunistic time for them to go public? Remember, Donald Trump just took over a couple of months ago. So is revenue going to be high because of the election in the fourth quarter? Is there going to be higher interest in their specific kind of news? Maybe the market is more receptive to a company like this. But with a $3.3 billion market cap, this is not a small company in the media business. This is a company that we need to look at what their real financials look like. And so that's why this chart, I think, is particularly telling. In the past year, the company generated $171 million worth of revenue. Now, that's a pretty significant amount of revenue. But if you look at that compared to their $3.3 billion market cap, Newsmax is trading for 19.3 times sales. And how quickly are they growing? 26.4%. That's a pretty good growth rate, but that's the kind of growth rate you might get from a company that's trading for 5, 6, 7 times sales. And if you're buying a company with that kind of growth at even a high multiple, you would expect it to be profitable. But you can see from this chart that the company is not profitable even on an operating basis. They are making a gross profit, meaning they're not delivering services that exceed their costs. But once you add in their SG&A expenses, which is a very big expense for a media company, they do have to sell all of those ads. Then you get to the losses that we see. Now, some of those losses are going to be one-time in nature because they do have things like IPO costs. But even before the IPO was considered, the company was losing money on an operating basis. The balance sheet, at least prior to the IPO, was also not a huge point of strength. $82.4 million worth of cash on the balance sheet. They raised about $75 million in the IPO. So let's say that leaves them with about $150 million worth of cash on the balance sheet. That's a pretty small percentage when you're looking at a $3.3 billion market cap in a company that continues to lose money. Now, it's possible that those losses turn around. And what I'm showing here is the operating cash losses for the business. And remember, negative $48.7 million, that's going to be probably including a lot of one-time costs related to the IPO and kind of getting ready for the IPO. So that's what would have been included in the fourth quarter numbers. But we'll see what happens later this year. The first quarter numbers probably not going to be real indicative of their ongoing costs because they're going to have even more of those IPO costs. But you start to get to the third and fourth quarter of 2025, then you're going to see much more what the real operating margins are for the company. And it doesn't look like they're positive at this point. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. And that's really the challenge that I have with a company like Newsmax. I think you look at where their business is, what they're delivering as far as value for customers. This is a company that could go out of favor extremely quickly. And it seems like the tailwinds are behind the business right now. That's why they've had a pretty solid growth rate over the past few years, 25+% over just the past year. But that was an election cycle. That could potentially be a high point for this business, especially if the media landscapes moves in another direction. These news companies that are very ideologically focused can go in and out of favor extremely quickly. So that's one of the things I want to put in your mind about this IPO. Why did they IPO when they did? Are they saying that this is kind of going to be a high point for the company's operations? They don't have to disclose how things changed, let's say in 2020, when there was another political change. Are they already seeing some of that slowdown in 2025 because of the election? That would be consistent with some of the things that we're seeing with consumer behavior and but again, not really clear what the future is going to be. This is another reason that IPOs, it's not a bad idea to just kind of wait it out and let the numbers settle in, because companies can kind of goose their numbers for their IPO, make the last few quarters before the IPO look particularly good, and then the first couple of quarters as a public company. But then what does that steady state look like? Where is this company going to be 3, 4, 5, 10 years from now? I don't think that it's necessarily going to be in a better position than it is today. And it's probably not going to hold meme stock status over that period of time either. So $3.3 billion market cap for a company that's losing money, burning through cash. This is absolutely a stock that I'm going to be staying away from, much too much like a meme stock. You can see the same thing with something like the Truth Social stock. Again, the fundamentals of that company are even worse. And eventually, the fundamentals for all of these companies matter. That doesn't mean that these stocks can't go up and can't even go parabolic over the next few months or even the next year or two. But eventually, how much revenue you're making, how much cash you're generating from your business is ultimately going to drive the value on the public market. So I don't want to be fighting against a company that has poor operations. I want to have those operations as a tailwind, because if you have great operations and you have a low price stock, the thing that management can do to fight back against that is just buy back their outstanding shares, have even less shares outstanding. And I joke with some of the companies that I own, I'm just going to be the last shareholder owning their stock. But when you have a money losing company that has a very high valuation, your risk is almost all to the downside for investors. And so that's what I don't want to be fighting against. I don't want to be having a company that has poor fundamentals, that can't buy back their stock and potentially has to dilute shareholders even more as the stock starts to fall. So I think that's the kind of trap that I want to avoid with a company like Newsmax, or a company that I think is a little bit like a sister stock, if you will, the Trump Media and Technology Company, the company that owns Truth Social. So keep that in mind if you were looking at Newsmax. I don't think the fundamentals are there for this to be an intriguing investment. If you're interested in the media space and where there is a little bit more profitable business in kind of a same area, Fox is publicly traded. That has Fox News, and it also has the Fox Sports channels too. So 2 solid businesses there, and that is a much more profitable business with much more history of generating a lot of shareholder value. But let me know what you think about Newsmax in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.